I'm Renat, co-founder of Etherisc. Etherisc is a decentralized insurance protocol to collectively build insurance applications. So a 20-year-old, for example, in China, could earn 3% of revenue of insurance company in the United States. So as a result, we have we're building a world where independent workers, not large insurance companies, but independent workers make a fair share of created value, and consumers get cheaper, better insurance products that are currently not available, and investors get access to risk as an asset class, which is currently not available to a regular investor.
Right, they have to, invest in the stock market, and for some insurance company that they don't really like, and then the insurance company has all kinds of practices that they don't even maybe agree with. So we need this so much for so many different reasons.
Yes, no one likes insurance companies, and one of the key problems. So people ask, so what problem exactly that you're trying to solve? There are two constituents. There are consumers and there are developers that we're serving. The consumers, we serve them indirectly. We work with developers. They're building insurance applications. They're called keepers. But the consumer is, and their problem, that's what drives this whole transformation. First of all, the asymmetry of power. As an individual consumer, you really have no power to force insurance company to pay a nut. And
you can try to call them and be on customer service for hours, but then eventually you have to hire a lawyer.
Exactly, and very few people have funds, time, connection, even understanding how to get what they're entitled to. And so we have situations, multiples, like where consumers are in a weak position when they're submitting a bona fide, truthful claim, but when an insurance company says that the amount will be much smaller. So we have one situation, one guy reports that they submit six-digit claim for the destruction of the house, and the insurance company MAP-free in Puerto Rico, they gave them an offer for 4-digit. And there is no way to do anything unless you sue them. Right. You can complain to a regulator, but insurance companies have no incentives to pay more because they're maximizing for profits. They're for-profit companies, and so the asymmetry of power is one problem. The second problem is the cost of this trust premium. Is that for every dollar that you, let's say, send through, let's say, Lloyd's, for example, or traditional insurance companies to share your risk with other people, in Lloyd's in 2016, the insurers who gave the Lloyd's the premiums, they only got 49 cents back. So the 51 was kept as a profit, as a processing, like all cost of marketing, right? So it's very inefficient risk transfer mechanism where it costs a lot. It's very expensive to just share risks between us, right? So we call it the trust premium. So the trust premium typically is half of what you give to the risk pool is being returned, and while they're making money on it, on investment income, while keeping your funds, right? So this is the consumer problems, but developers are also in a weak position to solve it because large insurance companies are not incentivized to let developers build insurance products. They're effectively a government-sanctioned oligopoly with big capital, having licenses, right? You cannot really build an insurance company yourself, right? Unless you have a lot of connections, capital, right? So what Etherisc does provide the common infrastructure for individual developers to build the new insurance products in infrastructure such as smart contract templates, UI, UX templates, templates of business plans, and even rental of insurance license. So anyone can start their own insurance company by renting these components and getting components in open source form. It's like you take an insurance company, open source the whole thing, the risk models, the actuarial work, the business plans, approval documentation to get the various approvals, right? And so our goal is to enable multiple keepers to have 5,000 individuals to build and operate operate their own insurance company where they're entitled to percentage of revenue, to underwriting profit that's left after the premiums and claims are paid, and investment income that they can decide how to distribute, to keep it or send it back to the insured pool. So
that is great.
Like 5,000 mini Warren Buffetts is what we're creating. And the first ones are already, the first products were already live on mainnet. Flight delay insurance was available on testnet in September 2016. For developers flying to Shanghai. Last year we added a real license to it, so the sales of fully regulated insurance by a smart contract began on October 25th. Developers who flew to DEF CON in Cancun, 77 bought the policies, 5 got the payouts for the delayed flights, and after we looked into smart contract, there was 3 Ether remaining, but no one else to pay. All flights landed. So that was the first underwriting profit generated by a decentralized insurance company, which is a smart contract. Yes.
I would like to ask you quickly about crypto loans, because ChronoLogic has a peer-to-peer crypto loan platform, and you were talking about you have this in your vision to have some type of pool to.
Yeah, it's not just a vision now. It was one of the proposals made. So people make proposals for insurance products that they want to distribute or that their token economy is needing in order to get mass adoption. So having a safety net is a way to get mass adoption, because it's safe for participants to come in and start using a new product or dApp or protocol. And so one of the networks, crypto-backed lending networks, came to us asking to build or have one of our members of our community to build an insurance product that is a collateral protection insurance for lenders lending their money to borrowers that put crypto as a collateral, right? And many lenders are not comfortable, especially institutional ones, to lend in a way where, in addition to credit risk, there are a lot of other risks. So we decomposing this for now a number of crypto-backed lending networks and building them a product that will allow to the lenders to be protected against devaluation of collateral, not due to volatility, but because of either the underlying project got damaged to the point where the value of this token is drops by 95% or more, or the link, if it's tokenized asset, maybe there was a problem.
But there
with
are
the
different
link.
risks associated with crypto.
Yes, there are a lot of different risks. So we're building a policy for a number of crypto-backed lending networks who are now joined our working group. They provide the requirements and they receive a policy where the lenders on their network would be protected. They can elect that the loans that they're issuing must be insured, or could be insured optional, right?
The ChronoLogic loan platform to be a part of that.
Yeah, so potentially we're inviting all crypto-backed lending networks, as well as those lending networks that will operate unsecured loan marketplaces, to join the working group and receive access to the insurance policy, which will pay the lender in case something happens with the underlying collateral, whether it's a bug, a hack, or maybe a borrower simply if they didn't pay taxes, the government could take it away from a lender. So these are various risks that we're working on to build this policy.
Great. How can people go to learn more about Etherisc?
They can go to Etherisc.com. They can go to GitHub. Our Telegram channel is very inviting, and we have a number of working groups who will direct any interested party to one of the sub-ecosystems of operating on Etherisc protocol that are building insurance products. So we have a need for those who could be product managers, for data scientists to provide the risk models, for example, for full-stack developers that can operate an interface that relayers, distributors can embed into their websites to sell insurance.
Can find a role in the
ecosystem. And people come in, they develop what they like in the product which they like, and then they put a price on it, and they provide their Ethereum account so that a portion of the insurance premium could a certain percentage of a fixed price per API call, for example, could be deposited to their individual Ethereum accounts, so that individuals, not corporations, get a fair share of value.
Excellent. Thank you so much for being here at EdCon and teaching us about Etherisc.
Yeah, thank you very much.